Hello traders, and welcome to this Sunday video debrief of a trade that happened on the 25th of April 2025. It was a typical look below fail that we'll be looking at. This was a trade that was prepped for and taken on the 25th. Now, if you get a chance, please go and have a look at the videos from the 25th. You'll be able to see the preparation and the thinking behind this trade to the long side. Now, a lot of traders talk about how they don't have, they miss trades, they don't have the conviction. So what we're going to do is we're going to be looking at the footprint, we're going to be looking at the ladder and seeing how we can maybe look for clues, manage risk and take trades in the areas that we want to at the time, because a lot of it is to do with actual execution. So you've got a great idea, but without execution, you're going to struggle to make any money. So it's about having the conviction. So you can't have the conviction if you don't have prep. Don't have prep, you're not going to be able to have that conviction, because otherwise you're just pissing in the wind. So the idea is to make sure you've prepped for the markets, you're ready for it, you understand the context, and this is what we did on Friday. It's all there for you all to see. I like to really focus on one product. My primary product is the indices. I look at the NQES and the Russell. There isn't really a day where I don't look at those products. So I have the conviction to trade because I understand. I've learnt these markets pretty well, and I try to be as well prepped as possible. Have a look at the prep that I did. I post it quite often on Twitter. I'll be doing some more of these videos, and this is the kind of standards that I'd expect, not only from myself, from the balance trader, but also from anyone that I'd be mentoring or anyone that I'd be trading with. This is the bare minimum. Really, people should be doing a lot more, and this is a debrief. People should be debriefing on Sunday. So let's get to it. Let's quickly have a look at this chart that we're looking at right now. This is just basically a quick look at the daily chart. And we can see that the market's basically off tariffs. It's dropped like a stone. We've touched into 4,800 and then we've bounced. And what we've seen for the last few days going into Friday, we've seen this basically rally off Monday's lows, which traded into 5,100. And then we've basically we've gone from, this range, which is around about 51.25 up to 5,500 in quick succession. And the key thing is to recognize what this looks like. This looks a bit like a P distribution. So we've got this huge spike candle higher. We've come back around about to the midpoint, and then we've managed to hold. And then the Monday, there was this little look below fail in the overnight session. And then we had a lot of comments that have driven us higher. So understanding the news context is also just as important as understanding the technical context. And if you merge those two together, you're going to be, going to have a lot more conviction in your trades. So a lot of good news. I'd say coming out of the US, China's kind of has been holding back, but yeah, again, positive news from the US. I think it's more of a standing down, which the market's taking as a positive. And then we just kind of had this stepping up. We also had some positive earnings from Alphabet. So this is all basically the macro and the bigger time frame context that we were looking into trading this on Friday. So let's have a quick look at the footprints. Now, I'm not going to go through the prep all over again because that's just pointless. That's not what we're here to do. But the area that we're really in question and looking for was this little pullback on there it is. So we were looking for this, we opened, we traded quite a bit higher overnight, but we were looking for this area into 54.85 to, get tested. The Thursday, we had this multi-distribution day up higher. This is the first distribution lower, so that's the bottom distribution, the middle distribution, defined by these blue lines here called singles. And then we wanted to maintain, we had a bullish bias as long as buyers could step in and hold this area 85. Basically, they were going to hold the upper distribution of the prior day's trend day up. And if that was to be the case, that would basically be a good sign for us that buyers are holding and we've got room to go higher. And more importantly, we've been trading in this area of balance with the highs of around 5,500. You can see here, this is this yellow line here. it's an old POC, but it also denotes roughly the upper area of balance, and we're just starting to step up through it now. So let's have a look at, I just want to show you guys on Twitter. I'm always posting. It's more for myself. I do it anyway, so I just post it for you guys to have a look at as well. But this is my prep, and the area that I was in question and I was interested in trading was the 54.85 area, and it didn't quite hold to the tick, but it gave us another setup very close down there. So what happened, we'd initially spiked through the prior day's highs, 55.20, and we can have a look. This is the actual debrief. So this is the actual debrief. So basically we initially spiked above the prior day's high. Ignore this stuff here. This is just basically the overnight session, which you need to kind of use for context going into the opens. But in this case, we spiked above, just opened, tested, traded through the prior day's high, and then we found sellers, and we found, we found a buyer after some Michigan data. Michigan data came all the way back up, but we failed to take that high. Now that is a bearish signal, and that is another trade that you could have potentially taken to the downside. And actually I did. So that's another trade that you could have taken up there on the failure to breach the prior high. So auction fails just below that prior opening swing high, and then we go all the way back down again, and then this is the trade here. The trade in question here is we set up and look below fail. So we're going to look at the footprint, and we're going to look at the ladder, how it traded into those lows, and how we could basically target a trade, take the trade to target and take some money. The first thing I'm going to say about what happened on Friday was that it was pretty balanced. So straight away you want to sort of we had an opening. We had an opening just at the in that upper distribution that we highlighted from the market profile just a few moments ago. We were trading inside that upper distribution, but what we were finding sellers at the prior day's highs. And we were finding a bid initially around about where the overnight POC was and the prior day's POC, and we also had some positive data from Michigan that would take this the picture would make it look, it would look pretty balanced. So balanced meaning that there's strong counter rotations within the first hour. Now that to me is a signal, that is something that I'm taking in to the for the rest of the session. I'm assuming that there's not high confidence for a push higher, although it's Friday. So Friday you need to be a bit careful, because Friday tends to kind of trend into a destination into the close. But we're with an open mind. But the key thing is here, we're recognizing that there is potential for rotations throughout the trading day, because we've seen that in the first hour. No one's willing to put their money where their mouth is. There is strong counter rotations. I'm expecting relative balance, and this is kind of what we got. So this is why on the push down through the IB, I was willing to entertain the idea of a look below fail. And this is something that I kind of denoted well ahead of time with the couple of people I trade with. I basically said, look, guys, I'm going to be looking for this look below fail. Some people were holding shorts into that, but I wasn't one of them. I'd gotten out well ahead of that. But the key thing here is to recognize this is such an important area to be patient and not to be sort of chasing lows, because this had shown us that this had been an area of reaction by buyers, and we wanted to see that hold true in this session. So if we just have a look now at the footprint, and the trading question was a look below fail. So let's just open up the TPOs. TPOs are basically first two sessions are set, and then we come in, have a look below, and then we spike higher. We grind higher, more not spike, but it was a 70-point spike. So let's have a quick look again at the price action. Let's just open this up, easy for you guys to see. Let's look at the delta. Let's have a look what's been going on. So you can see we've got positive delta. Okay, that's just something to bear in mind. Positive delta indicating that the aggressor is the buyer, and what we really want to do, what we want to see is whether or not price is moving in line with that, and actually that wasn't really the case because we had quite a rotational day, so we probably had some passive selling, but quite aggressive buying. Buying probably emanating from the fact that we had positive earnings from Alphabet, and buyers were needing to buy off the open, and that would give us this positive delta off the open. Okay, so another thing to also realize is the volume. The volume was relatively low. We didn't have very high volumes. High volume is blue and above the yellow line. We can see that we traded mostly underneath it all session. So that's something else to sort of put contextually into your thinking, and just start thinking, do you know what, this could be balanced. This, I'm expecting balance, and when I'm expecting balance, I'm looking to trade the edges of balance. Off the open, this balance area was defined by the initial balance low and the initial balance high. You can see with the large rotations in between. So the trade that I was looking for was this look below fail of 80s. It was just below the area that I was looking for, an 85. So what basically happened here is we got stops through the 85s, which was the overnight lows. We stopped through the overnight lows into those 85s, and then we started to find a bid, and then we started to move higher. Now, I'm going to go and have a look at and set this replay. Now, apologies because I'm using Sierra Charts replay, which doesn't give me the order book, which is really, really annoying. But I think we'll see enough from what we, we'll see enough to describe what we want to see, and see if we can help people along the next time it trades. Okay. The key thing is to recognize low volume. We've got rotation, so expecting counter bids and offers at key inflection points. These are the key things to this trade. Okay, recognizing low volume and rotations. Okay, so this is what we're going to be looking for. We're looking for the look below fail. Now, if we'd seen high volumes to those lows, this is a different trade, different setup, and it's possible for a breakdown, but that wasn't to be. Right, so let's have a look at the next chart, which is going to be the footprint. Everyone loves a good footprint. I think my footprints are the best. You probably can't see them so clearly, but I think these are the best footprint charts in the business. I use volume as the bar, which I adjust. So let's go to, I'm going to place at 5 times the speed. I'm going to start just before the IB forms. The market is, let's just have a quick look again at the 5 minutes to describe that. So basically, into this market, the market has just come from 23s, the highs, traded really aggressively in 15 minutes. We've gone from 23s all the way down to 82s. I think we set the IB around there. This IB on this 5 minute chart is always incorrect. I don't know why, but if anyone knows, please message me. And it's not because of the 59.59. Before anyone says anything, I don't know why. Anyway, so this is this IB here is out by 2 points, but forgive me for that. My IB on the footprint is correct. So we've just come from 23s all the way down to 80s, and we're looking for the look below fail of the IB. Let's have a look at how that plays out. Let's minimize this. And let's hit play, see if it works. Clear all data for symbol and count. Okay. This is a pretty good tool, actually, guys. All right, there we go. I'm going to just pause it. Okay, so I'm pausing it because what we see here is as we've come down from 23s, I'm going to just squish this up so you won't be able to see very much, but you've come down from 23s, failed to take that pre-open swing high, and we've failed, and then we've pretty aggressively gone through the opening range high, opening range low, aggressively spiked through this mid area, this double O area, which is not really acting as any support or resistance to this market. It's balanced. When it's balanced, the middle bit, you don't want to trade it. And then we've come all the way down and we've just set the IB. And then we're just at the point where it's testing that IB again, once more again. So what you want to see here, what you can see is from the high, you can see delta aggressively moving to the downside. So these are the deltas for the bars. Sell, 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 sell. You can see like this is aggression. This is aggression culminated by this big one here. We've got a big push to the low. Okay, but then here you go. Here's a little clue. Ooh, there's a buyer. there's a buyer. Surprise, surprise. But then what happens is that the buyers let off, and the sellers take control again, or attempt to take control, and they push once again into those lows. So I'm going to hit play. We want to be seeing what's happening at this time. We're now trading 86. We're looking at 82 as a set. These are IB. We've got some levels here as well. And let's see what happens. And let's see if we can try. I'm going to just expand this so we can actually see the individual footprints and the slightly more detail. Okay, I'm going to hit play, see if this works. Here we go. I'm going to slow it down a little bit as it gets to... Okay, so we've got a big bounce, and you can see now Delta is now pushing higher. There's a buyer down there. Okay, that's the first thing you should say to yourself. Now it's possible here that you can take this, looking for an opportunity to take short in this area down lower. I'm going to put that on pause there. Pause. You see where we spiked into that high? We just went from 81s all the way up into 95s. Okay, now as I just said, there is a possibility that you can take this trade short. And where? Well, I'd like to think somewhere around this 00 here, in which case that we've missed that opportunity. It's up here. But then if we miss that opportunity, there's maybe another chance to go short somewhere around here. Now, I'm saying that you might want to go short. I didn't want to go short, okay? The reason I did not want to go short or take this short for continuation lower is that, one, this market hadn't confirmed that this wanted to go lower, okay? 2, we'd seen buys down here. 3, low volume, okay? An object will remain in balance until a stronger force will push it out. We had not seen that stronger force push this or want to push this market lower. Okay, so I was not willing to commit to taking shorts. I could have done if I wanted to scalp, but I didn't. Okay, but I was not willing to commit to taking shorts in this trade because I was noticing that the volumes were pretty low at these extremes, and that's not what I wanted to see. We'd seen these fast rotations inside the IB, but we'd not seen the volume that that would make me feel confident for taking this short. So I was more confident in the idea that this, given the fact the context was higher, we'd been one time framing high, we'd taken the highs from the price session as well. There was a possibility that the look below fail was on, okay? And I really wanted to see this area hold, this 85. I'm repeating myself because it's super important to get this down. Okay, so we're gonna hit play and just see how this trades now. We're trading at 88. Some people might have wanted to go short here, not me, but then we came back down. We're coming back down again now, so hit play, see how it goes. I'm ready to hit pause. Okay, there we go. There's a little blip. Okay, I want to just highlight what's happening here. So basically, we've pushed all the way down again. Sellers are trying to push this through, but you saw an immediate reaction from 80s all the way back up to 82.25. Okay, that was super quick. This is speeded up a little bit, but let me just slow it down now so we can see the rest of it in slower motion and see how quickly, if you take this trade, based on some good decision making, you can actually get some risk off really quickly and then try and hold for high. So I'm going to hit play now. This is 2 times the speed. We've just pushed through this IB and we've immediately seen a reaction to the upside. Okay, that is a signal. That is a signal that buyers are down there and waiting. And we can see this nice little tapering at the bottom where 32, 6 lots of trade, 32 and 6 lots are traded into the bid. Okay, we've got this big delta into the downside, a big push, big attempt. But what do you want to see when people are pushing and bulling this market around? You want to see them getting paid, and they are about to find out whether or not they're going to get paid. Paid mean the sellers want to see their aggression pay off. They want to see this market move lower. So what you really want to do for continuation is you want to see this really get through there, and you want to start seeing stops from overnight, from the night before, from the day before. You want to start seeing this really start to go, okay? And then that opens up to another possibility, which is break through that area, that IB, retest, continuation short. But that's not what we're looking for here. We are looking for these guys to get trapped. And let's see. Okay, So it now pushes away, okay? And then sellers still, do you see that? They come back in, but that 80 and a quarter holds immediately back up through 82. And I'm going to pause it again, okay? This is where now you're starting to think, look, you can start seeing these big orders hitting into those lows. These are stops. These are people who are just panicking. That was the first push. These are more panic artists selling into that area. And what we want to do is we want to see it come back through that IB, and then all this volume that's being done at the bottom, you can see it's very, very flat bottomed, not very tapered footprint at the bottom. It's, you know, this is basically all this short positioning here. Negative, negative, negative. You see, it's all red, 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 red. These are all sellers, 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 sellers. Now, these sellers here need to get paid, okay? And if we start trading above 83-ish, 83 and a half, this big high volume node here, you're going to start seeing a run back up to the upside, okay? And this is where you want to try and take your trade really, really accurately, and somewhere around there is going to be your stop. And I'm going to hit play again. So what you're seeing here is this immediate push. Now, at the moment, this looks like an unfinished auction to the downside. So it's a bit risky to try and take this trade immediately now. We are now under the IB. You don't want to do it now. You want to trade on the upside of the V. It comes down. It's selling off, selling off. You don't want to be short below your area. You want to see all those traps getting set. This trap is getting set. You want to see basically shorts covering above that little block at the bottom. So let's see how this plays out. And I think I remember looking at the ladder, and I just kind of, as it was going through the 82, I could see the aggression. I just lifted it into it. And I think I lifted 82 and a quarter on the dot. It's really quick on the way back up again. So there you go. They're trying to hold, trying to hold, trying to hold. And there you go. That's where I got in, I think. That little blip and then hold one tick. That was enough for me to get in. And now you can see, look, now it comes back. It tests. You got a little taper at the bottom. Sellers are still trying to hold, but now they're panicking. Now they're starting to panic. And that's how you can get your trade on for very, very tight risk. You can get this trade on somewhere in that, on that line, in this case, with a stop down the bottom. You're only taking 2 points of risk in a highly volatile market. Your target is really, you want to try and get it back up to double O's. You want to see if you can start taking out all of this positioning, and then try and head for that lovely IB mid at the top, which is at 5,500. And basically, that was the trade. So hopefully, I haven't been talking too fast. Hopefully, you guys have understood some of what I've just said. But this is the crux of looking at order flow and being super diligent in understanding and following the order flow throughout the trading day, and how it can give you an edge. If you've got any questions, please post them. If you've got any anything else that you want to bring up or look at regards to order flow, you can see now we're trying to push up above that that POC. We're just watching this now for fun, and it's going up, 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 up. But yeah, this is a lovely, lovely trade. Now, in this environment, lovely, lovely trade is 10 points within a couple of minutes of trading. Look, within 2 minutes, you've got 10 points of trade, of profit, okay? It's really, really easy to take these kind of scalps in this environment. And you know, they can play, and if you can play it right, you can take really, really tight risk for some very, very nice scalps that might develop into something more. And that is the key thing to recognize, is that something more. We don't know if this is going to continue. There could be a comment, there could be a headline, but what we can do is we can try to follow the order flow and then put steps. What do I want to see next? Right, I want to see this POC hold. I want to see this little low volume node here hold. I want to see that area hold, and you can see here we've got some big volume trying to hold that POC now. Basically, that's just shorts holding, and then this area here really wants to, you know, we want to try and hold this area here as well. But you want to set yourself like, you know, gateways, like an airline pilot flying through space, three-dimensional space. You want to say, right, okay, I want to see it go through this area. I want to see it go through this gate. I want to see it go through this gate. You want to put yourself gates that then, you know, you can follow, and then you can tick them off going, right, okay, this looks like, this is good, this is good, this is good, this is good, this is good. Once you've got your risk off, okay, once you've got your, you know, 5, 6, 7 points worth of risk off, okay, then you can sit back and go, hey, do you know what? I'm going to look at Twitter. I'm going to take my eyes off things. I'm going to, you know, follow it less closely, because, you know, following things closely is is a distraction sometimes. You've got the trade, you've got the trade idea, you've done your prep. Now's the time to let the trade play out. Okay, so what you really want to do here is trying to ease off. You're just looking for these gateways to hold. Right now it's holding the POC. As you can see now, it's trying to hold this POC. But you want to try and be less intent. The hard part of the trade is getting it on down here, 80s, 82s, okay? That's the hard part. You've done it. You've got your risk off. Well done. Clap, clap, clap. Now's the time to just sit back and let it play out. Do not watch every tick, because if you do in this environment, you will get ironed. Well, not ironed, but it's very easy to get sucked into the minutiae of order flow. Another thing I just want to kind of just highlight, and I posted this today, okay, this is about information risk in this market. At the moment, whenever you take a trade on, you're taking two types of immediate risk when you're taking the trade on. One is information risk, okay? A lot of traders wait for more information to confirm their trade setup, okay? So basically, this is the typical market pushes down into an area, and then you want to see a retest, and then you want to see it. That retest gives you the confirmation that the buyer's in. Like we're kind of holding this this POC here, that's confirmation. You're waiting for confirmation. The buyers are in here, they're now stepping up, and the market's going higher. That is something that every trader takes. We're taking information risk, but the other thing we're always doing is we're always taking price risk. When you have more information, you have taken you're letting the market develop. But in foregoing, in taking more information risk, you're foregoing price. Price risk is, for me, at a premium in this market, because the market moves very, very quickly and very, very aggressively. The rotations are aggressive and quickly. You can see in, what is it, 8 minutes? 8 minutes, we've moved almost 20 points to the upside. So I don't want to be buying up here and waiting for confirmation and more information. I want to be taking more information risk and less price risk. And I've highlighted this in this post here, which I've scheduled to come out today on Twitter. And I want you to kind of really take this in, have a think about it. How do you apply it to your trading? And I've spoken to a few traders about this, and it's really, really important to recognize that, well, the way I trade, my edge is understanding the order flow. So I'm always willing to forego information risk, confirmation, that pullback, and I'm always willing to minimize price risk, okay? Because as I've kind of stated in this tweet, if you get long at 2, you're still going to take your stop out where I am going to get stopped out at 1. So I might as well just try and get in at 1, and then I've got this area here where number 2 is getting in. That's my risk off area. So I can risk off when everyone else is getting in. And if it comes back down again, I can reassess and maybe even get back in again with more size. So the trade that you're taking on the confirmation I could take that trade also, but I'm always trying to get in quick. I'm trying to always get in first, okay? Or I'm looking for environments where I'm looking to get in first, trying to get in quick, okay? That doesn't always take place. And I've been mentioning a few times on Twitter that there's a lot of toxic flow in this market, and if you don't recognize toxic flow, you will get ironed. Toxic flow is basically where no levels are holding, it's just going through like a train. You do not want to stand in the way of that. That is dangerous, okay? And that tends to come from things like this news, which I've got next to my desk, trade set up at all times. It's on my screen. I'm scanning news more than I am looking at charts. I would say that's just basically how it is. So there's a lot of news risk at the moment. So I'm always looking to get in as close to the area that I'm looking for. Right, I'm losing my way now, and I think I'm babbling. I think I've covered everything. I think that was a pretty good session. I think hopefully you've all learned something, and if you have, please subscribe, please like, please share, and I'll do more of these if I see that there's a demand for this. One thing I've always said is that it's very, very hard to learn from a tweet, from a video. What's really, really needed is some live action trading, and I'm willing to do that. So if I see that there is demand for it, that's coming up soon. I've also got for you guys a prepared journal that I've done talking about trading volatility in these markets. It's got lots of videos, links, and a free order flow trading course. So I need people to like, subscribe, tweet, follow. I need to grow this a little bit more because doing this for 5 people is a little bit pointless. I think it's high value, and if you feel the same way, please support me, and I will pump out more. So there is going to be this this journal coming out with a free order flow course, about 8 sessions. One of the best I think out there. Completely. Well, I won't say what it's going to cost you, but it's not going to be very much. It's going to be free. No, did I say free? Oh, I've given it away now. Okay, right. Right, I'll catch you all later. Thank you very much for watching, and we'll do this again. Please debrief. Please do your prep. These are the 2 things that every trader needs to do. Otherwise, you're just you're pulling the handle on a slot machine. Okay, right. Good luck.